Tax day just passed, and I have a question. Are you building wealth or just closing deals? That's going to be the topic for today, and just want to kind of lay a little disclaimer out there. Brian nor myself are licensed financial advisors. And anything that we say today, we encourage you to put in front of your accountants, attorneys, and things like that. But today we're going to talk about finances in and around the real estate world and how you can maximize and set yourself up for success, and not just pay the bills, pay the tax man, and empty out your bank account every time you get a chance. So that's what today we're going to chat through.
Yeah, we're going to talk a little bit about financial literacy today, and a lot of agents wouldn't even know what that means, but really it's just, hey, here's finances, here's money, here's how your business works, and we're going to make you literate around that. I know some of you have a lot of this information already, but we're just going to give you maybe some stuff that can help you going forward, or you may be able to add to your business currently.
Absolutely, and we'll kind of dive into maybe some things you can set up today to help with retirement. Because let's just be honest, you've heard this before, and I've heard it and seen it. Real estate agents don't retire; they die. And while that is true, a lot of cases, it doesn't have to be. And if you set yourself up and put a plan in place, you too can retire from this wild world of real estate sales.
So let's jump into it.
Yep, let's do it. So why do real estate agents struggle with finances? Let's just ask that just kind of broad. Why do they struggle with finances?
Well, there's this just plainly a lack of financial education. It's not just in real estate, but it's just across the board. Unless you are like an accountant or a financial advisor, or you really have that information ingrained in you, it's kind of hard to know all the rules and all the laws and all the things about what's the best way to save some money and put money into something to get it back.
I'm going to take it even a step further, because you and I have worked with a phenomenal organization, Junior Achievement. Mm-hmm. It's even at the education level. Getting into the schools, there is zero conversations in the schools about financial literacy, about how do you use a bank account? How do you use checks? How do you use a debit card? What does it mean? And it just goes back from just infancy that there is literally no conversations around finances. And people get through life and they just make it up as long as they go, or they skin their knees and make bad decisions because they haven't been taught or experienced what it looks like to have a plan set up.
Yeah, and some people would say that was done on purpose to keep people in line in certain ways, and which is the reason why you have the term financial freedom. When you get these things, you put these things in place, you have freedom financially.
Absolutely. And, and back to the real estate world, it's also in this, as a commission-based person, it's feast or famine, right? Mm-hmm. It's, when money's coming in, it can be a lot of money coming in at a given time. But there's also expected dry spells where money is not coming in and expenses are still going out the door. And how do you manage that? How do you make sure that you've got stuff set aside for those things that are maybe outside of your control? Let's just be honest. If you're in sales and you're not closing any transactions, money's not coming in. But that may not be the fault of you. It may be the fault of the market. It may be the fault of some health stuff you have going on. It doesn't. There's a lot of things that go into that. But if you haven't planned for those and you're only planning to how you're going to spend the money when it comes in, it's a tough road to hoe.
Yeah, I would challenge real estate agents with this. I feel like real estate agents, when it comes to their finances within their business, they own a business, their real estate sales business, it stops at the revenue line.
Yeah.
It stops at the commission. I make this commission, I get this, let's call it $10,000 commission check, and now I can put it in the buckets where it needs to be put into. I can go spend, I can do this, I can do that. There's no forward thinking on, first of all, how much I need, But then secondly, once I get it, where does it go?
Right.
Because then if you're just stopping there, what happens? Where does it go? It goes to whatever is priority or top of mind at that point in time.
Yeah, and I would take a step back. For those that are listening and have gone through this, I've personally gone through it a number of times. And this is speaking from experience, and I know those out there that have been in the business for any amount of time have experienced this. There's also a guilt of. I mean, if you're providing for a family or a spouse or anybody other than yourself personally, right? You're responsible for anybody else or multiple people other than yourself. There's a guilt that comes with it. It's like, oh my gosh, it's gone. That money is gone. I'm really out there working, but I'm not providing anymore because the money is gone. Mm-hmm. And how do I manage that? It can be a depressing place to be when you're in that situation. It's a high of highs when you're on top of the mountain, but it can be really low when you're not. And so how do you it's important to know that and then manage to be able to mitigate those sorts of things, right? You don't want to be in the lows. So if you can put a plan in place to manage that, the better off you're going to be. The highs aren't going to be quite as high, but the lows are definitely not going to be so disparaging.
Yeah, and let's talk about, so we talk about getting focused in on revenue, or that's typically what happens, getting focused in on revenue. Where we need to go is getting focused in on cash flow.
Yep.
So the revenue comes in, the commission check comes in. What happens after that? There's expenses that have to be taken care of. First of all, there are expenses of running your business. That's usually where the first piece of it goes. And then there's expenses that need to go. There's things you need. I don't know. You may have your personal wrapped up in your business. I would argue you probably need to separate it. But, there's things. And then at the end, there's cash flow. And either that cash flow, either you have it separated with your business and that cash flow comes to you personally, or you have everything personally wrapped up into your business or your business wrapped up into you personally and their cash flow. And then that cash flow goes towards, hopefully, investment at that point that will bring you more return.
Absolutely. So let's kind of break. Brian, let's talk basics because let's just be honest. In watching agents on the regular, we need to get back to basics about this. If you have a singular account that you operate your business, personal, and lifestyle out of, I'm going to say that you're probably not set up for long-term success, right? Yeah. You need to separate your money. Your money needs to be separated, right? So you've got your business, your commission income that comes in. That's your business account, all right? And then you have personal expenses. As you said, you should not mingle the two. So have a personal account that you pay your rent, your mortgage, your groceries, whatever. It's not, that doesn't come out of the business account or the main account. And then you have to pay Uncle Sam. Mm-hmm. Uncle Sam is going to get his, whether you pay him now or he comes and takes whatever you have and you pay him later. Mm-hmm. So at a bare minimum, you should have 3 accounts set up: tax account, a personal account, and a main business account. And then if you do that and you work out of those accounts with what the expenses are, you're going to be able to self-identify really where the money's going and be able to separate it out. You're not going to be sitting there spending the entire, $20,000 commission in the first 30 days, or the 30 days that you have it come in.
Yeah, I'm going to take that a step forward, which is the reason you want to break these things out is because, and it's very simple, you want to run your business as a for-profit business.
Yep.
Why would you not? Most people, if you lump everything together, most people run their personal finances as a not-for-profit. Not many people, well, let's put it this way. Most people spend over 100% of what they bring in. What that means is they're going into debt. Now, I'm not saying that that's what we should be doing. You should actually, hopefully, be spending less than what you're bringing in, and then the remainder goes into building wealth and things for the future. But typically, you're spending at least 100%. I mean, most people, that's what they're doing. So they're running their personal lives. They're running their personal financial lives as a not-for-profit. Yep. You want to be running your business as a for-profit business.
Absolutely. Absolutely. So let's talk through some money management ideas for agents. Do you start from the bottom up? Do you start from the top down? What's the best place for someone who is just fed up with living this roller coaster lifestyle and they really got to get their stuff? Where do they start?
Where I would start is I'd go, okay, I'd look at my personal needs. Okay, I'd break it down into, and I do it monthly. I break it down monthly. Okay, I need, X for housing, X for insurance, X for whatever. And you break down all your expenses on a monthly basis. And you see that's your end number. That's kind of your nut that you need to have come in to at very least be able to make all your bills by the end of the month.
Right.
Okay. And then from there, you come up and you go, okay, that's X. Well, how much do you want to add? How much wealth do you want to build? So you need to add on to that piece of it. Okay. Now, you've got how much you need to bring in from there. So this is the amount of revenue I need in my business to cover me personally. I know it sounds like we're still wrapping everything together, but it does separate, because in order to bring in that revenue, you're going to have expenses associated with it. You're going to have to do some kind of marketing in order to lead generate, to get this revenue to be able to provide this market. So that's where you separate personal and business.
Yep.
Okay, so in your business, that's your net profit number. Okay, so you're still going to have revenue. That's your commissions coming in. You're going to have expenses that come in that brings you to that revenue. And so you take that revenue minus those expenses, that brings you to your net profit. That net profit should roll into your personal and cover all your personal expenses, very least.
At the very least. But do you... You've got a net profit. Mm-hmm. Do you send all of that money into your personal, or do you keep money into your business? Do you pay yourself? You have one of the things that we do is my family has this business account, mm-hmm. and the business account pays myself what my monthly family needs are.
Right.
Which is less than what's in the account.
Correct.
Right. So that I'm not draining that account down to all the net profit out of my business account. I'm paying myself what I need, and then the remainder of that either I reinvest in the business or I reinvest into a retirement or an investment. Something that's going to return money, whether it's in the future or right now.
So all right. So yes, you're running your business for profit.
Yes.
So that's what you're able to do. And yes, once you get all these minimal needs met, yes, absolutely. You want to be able to go, okay, I'm making more money. What am I going to be able to use it for? Yeah. Do I need to invest more into my business? Do I need to invest more into myself? Do I need to take those numbers up a little bit? Do I need to apply that to retirement? What do I need to do from that standpoint? So yes, absolutely. Bare minimum, take care of your monthly needs.
100%. Okay, so next piece, when you're looking at your business and you're looking at your expenses, if you're not budgeting, you need to be budgeting, right? That's mm-hmm. bottom line. Mm-hmm. Business, personal, taxes, all that stuff needs to be budgeted. So let's kind of walk in, and this is a conversation. And remember the disclaimer: we're not tax professionals, we're not financial advisors, but I do want to talk about some benefits into setting up your business as a business. And giving, as an entity, whether it be an S corp, C corp, LLC, whatever it is,
right.
there are some great benefits into setting yourself up as an actual entity that's not just all personal or doing business or
right.
Self-proprietorship,
right?
And so, what are some of those benefits? What are this is not operational stuff. This is just basically commission pass-through. I get a commission that comes to my company, and then I pay myself. What are some of the benefits to that?
So, well, first of all, the biggest benefit of setting up an entity is liability. You cut off some of your liability. So for example, let's say you have your business, and again, go back and read the rules, because there's a piercing of the corporate veil that can happen if you don't follow all the rules in this, and then the benefits aren't applied to you. But the biggest benefit is the liability benefit, which is, let's say you have some kind of error that happens within your business. Somebody sues you for something. They can only go and get the assets that are associated with your business. They can't come after you personally. That is the biggest benefit in that. Now,
risk mitigation.
Correct.
Yep.
Correct. Now, there are some other benefits. Number one, so step back. In North Carolina, we are, I'm just going to say incentivized. I'm not going to say they force you, but our real estate commission incentivizes you in the form of, well, maybe they do force you to be an S Corp if you have a business. Mm-hmm. Now, the benefits of being an S Corp in the real estate business, number one is the ability to forego self-employment taxes. If you're LLC, if you're some of the other ones, I don't believe you can do that. But with that one, you can.
Yeah. And so, we were just looking at just a minute ago, self-employment tax is roughly 15.3%. And that, what is self-employment tax? It's Social Security, Medicare. Mm-hmm. That's the two of those items that get to pay in. It doesn't mean you get to forego paying in Social Security and Medicare completely, because you still got to pay yourself.
Right.
And you're going to pay some payroll taxes when you pay yourself a salary. But you may not have to pay the entire amount of income as a percentage to self-employment tax.
Right. So when payroll taxes are made, there's two sides of it. There's the payroll tax that's paid by the employee and the payroll tax that's paid by the employer. And what you do is you get to forego that piece of it when you're doing this.
Sure. So there's some benefits there. So I encourage you guys to reach out to your tax professional, CPA, or attorney, because again, there's two components. There's a tax component. There's also a risk mitigation and liability component to it. So, and most people don't. Most people pay themselves as individuals. Mm-hmm. It's easier. And I get that, but easier does not always necessarily mean better. And
let's just be honest. When you set it up separately, you can take things as expenses that you typically wouldn't be able to take as an expense personally.
Right.
And basically it's almost like writing off that expense.
That's correct.
So
yeah, of things that you would typically do normally as in personal living.
Right.
Yeah.
I'm not saying go and expense everything that you do living into your business, but you have the ability for things you use within your business to expense.
100%. I mean, let's just be honest. I mean, most agents right now, I can say most, work out of their house.
Yeah.
And they've got dedicated space that they're running their business out of their house. Well, you need to be taking advantage of that. So the things that you're doing for your business, and some of those things can't be done in certain the way things are set up.
Right.
So all right. So Brian, let's step forward. So we've talked about an entity. We've talked about this. We've got our basic needs met. We're paying ourselves a salary, whether it's through an entity or just as a sole proprietor, and we've got money left over. And we're like, okay, what do I do with it? How do I plan to put this money to my best use? And there are a plethora of different ways to use this without flushing it down the toilet, which a lot of us do anyway.
Right.
So let's talk through. So I've got excess cash, excess funds. What am I doing with it?
Well, there's so many things you can do with it, but I'm going to start with a philosophy that Warren Buffett always talks about: invest in what you know. And we as real estate agents, what do we know best? Hopefully, what do we know best? Real estate. Yeah. So that's what I would be doing. I would try to focus on how do I start or how do I build a real estate portfolio or a real estate business outside of sales investment business from that standpoint that's going to bring you a return. Long-term holds. If you like to flip properties, even though that's a lot more risky, you got that aspect. So there's other things you can do, but that's where I would start. However, a lot of times that takes a lot of capital to get into. So there's other things you can get into, different types of retirement plans. You can set up IRAs, Roth IRA is great because it is a way to, you don't save on taxes from that standpoint like you would be able to on some other retirement accounts, but you put it into this Roth IRA, it grows in the market over time, and when you do take it out, you're not taxed on it. So the dollars you put in some of these other retirement accounts, you get the tax benefit now, but as it grows, you're taxed on all the funds you put in and the amount that it grew. You're taxed on those. With a Roth, you're only taxed on that money that came in. You taxed on it as money you brought in as revenue, and then you put it into this account, and it'll never be taxed again.
And on that piece, that you're exactly right. But one of the things that a lot of people don't think of on Roths and compared to traditional or 401ks is the taxes you're paying today on the Roth of not deducting it, right, is today's taxes.
Correct.
The taxes you're going to be paying on pulling money out of a traditional IRA or a 401k are taxes that you don't know exist yet, that haven't been passed, that are down the road. It's an unknown. It could be much higher in a much different situation when you're ready to pull this money out, and thus could be a huge difference.
Totally, and that's the argument of what do you do now or later. My personal philosophy on that is, we have pretty high tax rates now. Could they go higher? Absolutely. You can always go higher. You could also go lower. I'm going to assume they're going to be somewhat similar, maybe change a little bit. My variable is I'm going to be making a lot more money as I get older in the form of investment returns. And I want those taxed as little as possible. I'd rather take my tax now when I can versus later. Your personal opinion on that.
So what you're saying is your tax bracket, you're assuming your tax bracket when you get older is going to be a different tax bracket. Not necessarily the taxes are different, but you're going to be in a different tax bracket.
Absolutely.
You have excess money. You're going to invest it, either set aside and build some a nest egg to go buy some rental property, which I think is a phenomenal idea. Is a great place for real estate agents to go. But how are we going to get more money? How are we going to get more income? Right now, we're a hunter killer. I'm going to go out and I'm going to close a deal and I'm going to get money, get revenue. Where else, other than what I do with the excess money, where else as real estate agents can we find revenue? Where can we get additional revenue to help grow that pot to be able to invest more versus just killing it, selling?
I think one of the simple ways to do it is finding ways to refer other agents. Especially in our network. We're in the RE/MAX network, and I think our agents do a very, very good job with this. But having that group that you get into, and we've got a couple agents in our office that have done this wonderfully. But having that group and then being able to attract people within your sphere or within your social media area to be able to go, okay, I'm not buying here or selling here. I'm buying or selling somewhere else.
Yep.
Then I've built my network to know I've got agents there that I can refer that are good at what they do, just like I am, so they're going to take care of them. And then I can send them there. And if you can build a system that can do that, then there's more income in that than you could probably do just in your normal business. Dave Ramsey makes more money on doing this. I don't know if people know this or not, but he makes more money on people coming to him as leads, and he generates those as referrals out to other real estate agents. Dave Ramsey is a real estate agent, and he's able to do that, and he makes a ton of money doing
Yeah,
that.
he does. Here, so if you're trying to figure out what do I do, put yourself in positions to meet people in different locations.
Yeah.
Go to conferences. Go to places where it's an aggregate of people across the country, and put yourself in those positions. More importantly, we've talked about this, till we're blue in place. You have to be intentional, right? You need to be intentional about those things. Look and see what states, what locations are importing people more than they are exporting people, right? So you need to be befriending people in Houston, Texas, and Charleston, South Carolina, and North Carolina is a phenomenal place. Is a great importer of people. But outside of that, go find places where the cities are importing people, because more often than not, you're going to know somebody that's going to want to go there. Mm-hmm. And so you're going to put yourself in a position to know someone to be able to send those referrals out, and it makes for a much better situation than just trying to go out and find that person when you need it. And ultimately, what you're also going to find there is the byproduct of the outgoing referral, or that passive income that you're getting. You're also going to get incoming.
Oh, absolutely.
Especially if you're in North Carolina. We are an importer of people. There is massive growth into our area. And so you're going to get more opportunities to be able to sell more if going to try to figure out how to help grow somebody else's business is part of your calculus.
Yep, absolutely.
So there's so many things that agents can do to put themselves in a better situation. We talked about this at the beginning. Finances are not fun. Mm-hmm. They're kind of boring. It can be depressing at some point.
It's not sexy.
It's not sexy. But guys, it's important to put the plan in place first, so that you're able to maximize what every dollar is doing for you, and is not just happening through your life. If your finances is just happening to you, success is not going to come easy. Yeah. You need to be doing things to the money that's coming into your world, not letting it just happen to flow through your world. And most real estate agents don't do that. And it's a shame, because we see a lot of money. A lot of money passes through our world.
We do it to ourselves. We give awards based on top line revenue.
Yeah.
And it's not the top line revenue that we should be focused on, at least personally. We should be focused on that cash flow, that bottom line. We should be focused on what we take home, what we can put more into building our wealth, not how much I made on the deal and then all of it left.
Yeah. No doubt. And we do it for selfish reasons. Instant gratification. We want to feel it now. Life is going to be a lot easier for you if you put that plan in place. Mm-hmm. So, guys, thank you for joining us today on our recent episode, and hope you guys have a fantastic week, and we will see you next time.